All right. What are we talking about today? There's a report. There's a big report tomorrow, Jon.
Yes. It's not a big report. They're going to tighten up the numbers. The final yield was January, so it should just be supply and demand and moving the numbers around a little bit.
And that's all we're going to talk about on the report today?
Welcome to Hedge Heads, where hosts John Prishman and Ryan Tungseth discuss commodity markets, hedging, and anything related to trading futures. Remember, the risk of loss in trading commodity interests can be substantial. These are opinions only and not trading advice. While no one knows where the market's going, they're not afraid to share some ideas.
Well, Jon, we're here in the new studio. Things are starting to come together. It's definitely the middle of winter, though. We actually had our first real snowstorm.
Just enough snow to bring out the snowblower.
and barely. Speaking of snowstorms, let's talk cattle market, because that could be a factor at some point, huh?
Yeah, so that's the market that is getting a lot of phone calls, and we're coming into a seasonal top. When I say seasonal top, it doesn't mean it's the top. It means you have averages. There's a 5-year average, a 10-year average, and a 15-year average are the three I use. And the averages form for a reason. That's why they become averages, and this one is steep. So we climb very steeply into about mid-February, and this is on the live cattle side. And then it tends to peak, I believe it was around the 14th to 17th, and then often that you'll find the cash top there. Now, last year, that was not the case. As a matter of fact, we were downtrending already, and it came into a low early spring. So last year, the seasonals would have swayed the 5, 10, and 15-year a little bit into a different time frame. But when you look at them as a group, the three match up fairly good. So it's a fairly strong seasonal. And often the cash top comes in cattle this time of year. There's years where the winter's very bad and there's a lot of winter storms past this date. And then you'll find those years where you can get a really big flare up for the April live cattle. That's usually the one that affects the most. So never rule cattle out, but you want to be aware that there's a seasonal time frame here where a guy should really be looking at hedges and hedge ideas. But I have been looking at it and I have been talking to clients. So that sounds great on paper. Hey, we have a time that we should hedge. Let's start looking at the numbers. And that's where the problems begin.
Well, I think, speaking of problems, there's not a great option to hedge right now, is there? I mean, when you look at we're under cash now.
Yeah, and then you look at the volatility in feeders. Obviously, the feeder puts are expensive normally, and then you throw in a year like this at these higher levels, you're going to pay for the feeder protection. A lot of guys are running out and doing the livestock risk protection. That's a different tool, I think, than using puts. Even though they're going to be based off the same thing, I think the puts are a superior hedge by a long ways, just simply because you can control the hedge. Although the livestock risk protection definitely fits for different situations better, without a doubt. It has its place. But generically, I like the idea that I can get out whenever I want to get out, especially if a market gets way underpriced, like happened last year. The market fell very sharply. The guys that were able to get out of their puts did. And then you reopen the upside back up on your cattle hedge, and that sometimes can work out for you. So the problem is the numbers are expensive. You look at one guy I talked to today, he was looking at January feeders for next year. Going out a year out is always expensive, but that's undoable. But even if you look as far as you can go, which is about September for options, you're going to pay $12 for at the money. So there goes all your profits for the cattle you're buying now. And the guys that are raising cattle, that's still going to be awfully expensive when you give up $12 at the bottom line. Well, that's not the only strategy that you can use. That's the only one with very limited risk. You could buy a put window to the downside, meaning you could buy it right at the money put, sell at $10 out of the money or $20, and that you could buy a window that doesn't open any to margin calls. And then you have the outright short the market, which comes with the risk of a lot of margin calls, which anybody that's done that up to this point knows that. So it's a dangerous market because it's could easily go higher still, but we're at a time frame where it would make sense where we could top out. And we're dealing with that kind of in grains too, where the funds really like these markets, and you get some more good news, and it's really going to go. Who cares what the season will say? But if that good news doesn't come and these funds want to get out, they can completely wreck the market, just these guys exiting, having nothing to do with the cattle price. So that's what we've been dealing with in really all these markets, is this fun position. It's been a fun ride up, but now what? Now what do we do? It's just a lot of risk with a lot of money to protect that risk.
Yeah, it seems like right now there just aren't great options in any markets. I think you and I were talking and saying they're not fun markets at all. There's nothing that's clear cut, nothing to even really consider in there. And it's because whether it's grain or whether it's cattle, these markets can go either way quite a ways.
Yeah. So if the funds still fall, they obviously built this position for a reason. And again, you get a couple winter storms, it could go up substantially from here. But what happens if the weather's really nice? You get some bad news. They don't like their positions. They get nervous and they want to start getting out. And that's just not predictable. And that's really where guys are struggling what to do. The only thing we know is we're entering a seasonal time frame where it would make sense to get protection on. We're definitely at levels where that makes sense. And the best idea is to call and go over the strategies. So I went over with two different people today, a young woman and then an older gentleman. And they both kind of had the same thing going on. How do you protect this cattle? They had two completely different windows. And we went over a plan, and now tomorrow on one of the accounts, we're going to execute that plan, and the other one, we're still going to talk more about it. So it's not this cut and dry black and white stuff. You really want to go over the numbers, get a number of ideas in front of you. And we have that new subscription service that we're starting. That's where we go over a little more in depth. It would come right to your email, to your phone, and we'd be going over some of the particulars, or we would obviously talk, or you would talk with your advisor, you would talk with your broker and go over with a plan. My job is to get ideas in front of you so you can lay out what you would want to do, see if anything makes sense, and then simply apply that. So it's been a struggle because the expense is so high. And then if you spend $12 for a put, there goes your profitability. Even up front, I looked at some April live cattle puts today for right at the money you're spending, right around $4 or $5. And that's not that many days. I think there was 53 days. So nobody wants to spend $4, $2,000, $4 or $1,600 to $2,000, just for a small window of protection when it's been such a strong market. So we just kind of keep going around in circles, and that's been the right answer so far. Do nothing. But there'll come a day where that's going to change, and it's starting to feel like that window for soybeans and cattle. You could say that much for corn. We had some nice exports in corn this morning. Really weird time of year for grains. It's normal for beans to have some weakness here, but corn to make these critical decisions this time of year is kind of different, where cattle at least fits the seasonal window and the price action fits with topping action. Still, we don't know if it's the top. This is a bull market for a reason.
Yeah, it's been a bull market for a long time too. So you can weigh that into your top prediction if you want. But speaking of the grains, we do have a report tomorrow. The February report isn't typically a super big one. But.
No, the January report's where you see that big, you can see a big yield reduction, which we did, or they could add yield, and you can get wildly unpredictable numbers. This one isn't known for that, just because we're really far along in the marketing, or along in the marketing year. We know where exports are. Yes, they could adjust exports one way or the other, and beans and corn, and you might get a little jump one way or the other. I think the analysts are expecting 1.4 they want to see a 1.4, or they're probably going to be disappointed. But really, after all these reports, I think they mainly have gone up, if not that day, shortly after that. So there hasn't been too many bad reports lately at all. They have been neutral to slightly friendly, wouldn't you say, for most of them?
Right. Yeah, well, definitely the last three.
Yep.
Yeah, I mean, because they started making adjustments in December, especially. But
yeah, that was, and then when they did that, and we talked about it in the prior podcast, where that was a big warning sign. There was a lot bigger adjustments coming for January. They showed up. Now the reports get kind of quiet. Now in the old bean market, these used to be incredibly important. This is where you'd see the bean supply shrink and shrink and shrink. So February can be really important for the beans. It just doesn't feel like a year like that. And so we'll see what it says tomorrow. It's not typically a giant market mover. It can be, and it's generally soybeans if it is. I don't see anything where they'd shuffle a ton of numbers around, but don't underestimate what the USDA can do.
That's very true. Although, yeah, you never know what may happen. What about any positioning for the report? I mean, all right, let's actually go backward on that because we just talked. It's hard to figure out a position anyway.
Yep.
But if there's a move one way or the other, are you watching to maybe get some stuff on?
It's been very quiet. The phone calls have been quiet on that. There's been a few guys kicking the tires on this, but really, you look at a market like this is a typical market where you just be making cash sales, incremental sales on the way up, and using this rally to your advantage at this time of year. Like in any seasonal year for the grains, this is a good idea to continue to sell into these rallies into spring. Not all at once necessarily, in whatever 5-10% blocks or even less than that, but use this market to your advantage in the cash market. That's where this has been the best market to be involved in, is using that storage, which a lot of guys did, slowly selling as the market goes higher, and just embracing that kind of market. It'll keep you out of trouble here. And there just is there any meat on the bone where you need a bunch of puts to protect something? Nobody seems very worried about it, and most of these reports really haven't moved. And then we've talked about strangles, just buying a call and a put. If you moved really fast after some of these reports, that might have worked. But really, there's not a lot of opportunity. You're going to have some more advanced option strategies that that obviously work better in markets that don't go anywhere. Like, I'm not a big sell the strangle sort of guy, but guys that have been doing it's probably been working. But that's a very dangerous strategy. So I just don't like where you wake up and you're wrong no matter what. You sold a call, you sold a put. It's going to go against you one direction. You just hope that the move isn't very big, right, and ultimately that you stay within that window of what you got for premium. And normally, what I'd be looking for is can I sell calls on production that I'm storing right now? Are the premiums high? And that hasn't been there at all this year. Like, this is probably the least amount of calls I've sold for guys or them selling them that I've seen, just because the premium just isn't there. So then you would say, hey, if the premium is so low, why don't we buy them? And if you timed it right, I mean, you could be scraping some gains out in calls. But I think from the last 2 years, that not working well, guys have kind of given up on that. And even if you did do it, you have to do it perfect. So these have just been kind of tough markets in these ranges that are really unpredictable. And when you look at them, they've been these blocky, choppy ranges, and very difficult markets for the longs and shorts.
Yeah, I think, you could say options are on sale, but it's because the volatility is low. And if the volatility doesn't come up, you're not going to make anything on that option anyway. So it's along with all the other markets, it's just a tough time right now.
And throw in the weak cash market, which I've talked about a lot in the spreads. The spreads look bad. Today, they finally look good in corn. But the cash market, that's really what's holding guys back from marketing, is that it's not following the futures. You normally see basis getting better this time of year, and that's not happening, especially with the numbers in corn we have and the demand that we're seeing. Another big Mexico purchase this morning. You're just not seeing this tightening up. It doesn't feel tight. It feels like the funds are investing a lot of money to hold it here. And if they gave up on it, it would fall like a brick. And that's really why the market's difficult, is because, the funds are driving it, but it doesn't feel like the fundamentals are in control at all, nor do they need to be. And if they aren't, they widen the cash basis out. And that's what we're seeing, which it's still kind of a mystery why the basis is not good in corn right now.
Yeah, it's I know I talked to a couple guys, and even which elevator you're taking it to right now makes a big difference, or where they're doing their cash sales at.
Yeah.
and guys are driving farther, from West Central Minnesota. I know a few guys are driving farther than normal just because the price is better.
Yeah, and ethanol plant's not calling you and your phone's not ringing off the hook. Like in some of these prior years, that wasn't even this tight. You'd have a lot more, are you going to bring your corn in? Here's a better deal on basis. And you're just not hearing a lot of that, or at least it's not widespread. No hot spots on the map either. Normally there's a couple hot spots and then it starts spreading from there, and you're just not seeing that. And as the calendar ticks by here, we're running out of runway for this ultra tight corn deal that some guys have touted. Eventually they start looking at that new crop and will transfer into trading the new crop, and then we're letting the old crop, the basis and the cash markets will take care of all that needs to take care of to get the corn where it needs to belong at this time of year. If it gets tighter, if it even happens, that usually happens in the cash market. It can happen in the futures, and the cash follow, obviously, the futures. But most often they start focusing on the new crop. We're not quite there yet, so I'm not getting bearish yet, but we are running out of runway for them to worry about the old crop supplies, though, for sure.
Right. Speaking of new crop, we have had some calls on December 25. I mean, that's a
lot of calls.
That's the majority of calls right now. And man, it's the theme of this episode, right? Don't have it. Pretty much all you can do is sit on your hands at the moment. But what are you telling guys when they ask about December 25?
Well, I'll never talk a guy out of locking in a profitable level. Am I a fan of locking in next year's crop in January with the outlook being very good? No, I'm not. Because if one thing goes wrong, it could go up substantially this year. Like we have a late spring plantings don't go good. And yeah, they're going to put a big number out there probably in March for corn acres. But what happens if we get 93.5 million acres? Well, then we have zero buffer because the carryover is not that big this year. So one problem, and this is going to go substantially higher. The thing is, you can't count on that problem happening. What happens if we have a perfect spring and it goes in nice and there's timely rains? We might be seeing the highs sooner rather than later. So it's one of these very complicated years where it's bullish up front, possibly bearish at the end of March into plantings. And then we have the summer where one problem and we go way higher. So that's why I don't want to take out the upside in January. But you can't talk a guy out of locking in a profitable price. And if that's what he wants to do, I'm a little disappointed that it seems like a lot of guys are doing that. And you finally get a year where it can go up and nobody's interested in that. But I don't have wonderful strategies to keep the upside open. The margins are thin, options cost money, and you're giving up some of the bottom line. But the way I see it, if you spend maybe 20 cents on a short dated put, we'll just use a generic example, you don't necessarily risk the entire 20 cents. You might see 2 months worth of news and then get out, and let's just say it goes up 15 cents from here. You might have a 10-cent loss on that option. Just time ticked off and it's a little bit higher. So just because you're fronting 20 cents doesn't mean you're risking 20 cents to see where we're going to go for the next couple months. I'm talking more than doing anything right now. I just really don't want to take that upside out for that December 25 corn, but it sounds like a lot of guys are locking that in. And again, I won't talk them out of profitable price. That's their business. I would do a little bit of that and then look for strategies that do keep that upside open.
Yeah, you mentioned, things go perfect, and that reminded me of South America weather. It's been near ideal from everything I've read up until, what was it, like 2 weeks ago, there was maybe a little scare, or at least there were news stories promoting a little trouble in South America, but now it seems like everything's backed. Seems like South America is going perfect. Are you hearing any news there?
Was there ever anything wrong? It's your pretty typical South American pattern. It's a large area, and you're going to find your problem spots every year. The latest and greatest was Argentina hot and dry. Not that it's not real for certain people down there. It sure is. How is it going to impact our markets? I think that they probably wrote the story around the price action. You would want to watch our meal market. That's going to be the most sensitive. China's soybean meal market's kind of going nuts right now, but meal is heavy. They export heavy meal and corn. So to say there was nothing there, but there's something every year, and
Right.
yeah, I'd say that South America really, what could happen? It could rain too much and they couldn't harvest it, but really the days are really getting numbered to get a weather market out of there. But there was that one year where it rained all, mid-February into mid-March and kind of ruined most of that bean crop out of there. But short of something like that happening, I'm saying this a lot today, you're running on a runway there too to get your bull story. It's just kind of a classic year where there wasn't much news, and it seemed like they kind of made some and went with it a little bit, but we're getting to the tail end of that too, where seasonally that's almost over. We do have the second corn crop, obviously, out of South America. That's the one they export out of Brazil. That is going to go in, and of course the weather will matter for that. So that's in the days ahead. It's not yet.
Makes sense. Well, Jon, that's a little bit shorter episode this week, but man, it's there's just not a lot to talk about at the mid-February time frame right now.
Yeah, it is the season of marketing meetings, and there's going to be a huge drought from what I understand. I think I've heard that every single year.
I'm sure.
Because you can say anything you want in February, really. We won't know more till summer actually happens. But there is no distinctive weather pattern that says anything one way or the other. It could be La Nina. It's forming. It might form. It might not. That's what we had last year, too. We'll know soon. And if it starts with a heavy La Nina, that could be hot and dry. But you never know. It is a season where everybody says it's going to be a drought because they kind of do every year. And there is a chance for a drought this year. We'll see. Other than that, we got our new website with all the tabs on there. You can, if you want more than the podcast, you can now subscribe, and you're going to get content on average every day, which is going to be insights. It's going to be audio straight to your phone, and then you're going to be able to click on that. And there's two different options there: subscribe for a year or monthly. So if that's something you're interested in and want to hear a lot more from us, that's the way to go.
Excellent. Well, thanks for joining us today, Jon, and we'll talk soon.
Bye.
You want to leave your number?
218-731-1578.
All right. Thanks, Jon.
Yes. Having to make that decision on the 25 corn because of the acreage report coming up in March is the question we keep getting on the phones and in the comments is like, what do we do and what are the options for December 25 corn?